Right now, Bitcoin is in a critical phase. Price is broken below $80,000 for the first time since April 2025, and we've already seen a wick down to around $76,000. This marks the longest monthly losing streak since 2018, 4 red months in a row, and sentiment has shifted into extreme fear. So the key question for this week is simple. Are we close to a technical bottom and a possible bounce, or is this just the middle of a deeper move toward the low 70s and maybe even $70,000? In the next few minutes, we'll cover the most important technical levels, the major macro events driving this move, what 3 leading AI models are predicting for Bitcoin this week, and the main scenarios and strategy for traders. Let's get into it. First, the technical snapshot, where we stand now. Bitcoin is currently trading around $78,700 after briefly touching $76,000 earlier today on the 4-hour chart. From a technical perspective, 3 things stand out. The RSI is around 27, deep in oversold territory. That tells us sellers have been in full control, but it also suggests the market is stretched and a short-term bounce is possible. The stochastic is also in the extreme lower zone, confirming strong selling pressure and potential seller exhaustion soon. The MACD remains below the zero line with clear negative momentum, which confirms that the broader trend is still bearish. Now, let's talk levels, because this is what really matters for trading decisions. Key support levels: $76,000, today's low and the first support. Losing this level cleanly would be a clear sign of further weakness. $74,500, the April 2025 low. A break below this level would be a major warning sign and could speed up the move down. $72,000, a big psychological and technical zone that many long-term models treat as an accumulation area. Key resistance levels: $80,000, the closest major psychological barrier. Reclaiming it is the first step toward any recovery. Around $84,700, roughly where the short moving average sits and where sellers are likely waiting. $86,000, a former strong support that is now turned into heavy resistance. In short, as long as Bitcoin is trading below 80,000 and especially below the short moving averages, the trend is still down. Holding 76 and 74.5 is crucial to avoid a deeper slide toward the low 70s. Second, the macro drivers. Why Bitcoin is under pressure. On the macro side, the last few days have been clearly negative for risk assets like Bitcoin. First, the Federal Reserve kept interest rates unchanged in the 3.5 to 3.75% range and signaled no cuts until at least June. That's a hawkish pause, which makes higher-for-longer rates speculative assets less attractive. Second, President Trump nominated Kevin Warsh as the next Fed chair, someone widely seen as more hawkish on inflation. Markets read that as a sign that monetary policy will stay tight for longer, which added more pressure to Bitcoin. Third, and maybe most important for the crypto space, Bitcoin ETFs have seen heavy outflows. Across the last week of January, outflows totaled more than $1.1 billion. On one single day, outflows were around $500 million, with over $500 million leaving BlackRock's flagship Bitcoin ETF. This is clearly institutional de-risking, not just retail panic. At the same time, total crypto market cap has dropped by around $200 billion, and fear indicators are flashing extreme. Put together, tight monetary policy, a hawkish Fed outlook, and big ETF outflows are combining into strong fundamental headwinds for Bitcoin. Third, what AI models expect this week. Now let's look at something unique, what 3 different AI models are predicting for Bitcoin over the next 7 days. One model projects Bitcoin around $71,500, roughly a 7% drop from current levels. A second model targets around $72,500, about a 5 to 6% decline. A third model is a bit less bearish, pointing to around $75,000, which is a 2 to 3% drop. Individually, none of these forecasts are guaranteed, but all 3 models are aligned in one direction. They are all expecting more downside, with an average target close to $73,000. That doesn't mean the market must follow exactly, but it does reinforce the idea that the path of least resistance, at least for now, is still down rather than up. Main scenarios for the week. Based on the chart, the macro backdrop, and the AI forecasts, we can outline three main scenarios. Number 1, bearish scenario, probability around 60%. In the bearish case, the current downtrend simply continues. In this path, Bitcoin breaks below $76,000, then moves to test $74,500. If that level fails to hold, price could extend towards $72,000, which lines up well with the average AI target zone. In a more aggressive flush, a sharp move towards $70,000 is possible as a capitulation spike. This scenario is supported by the hawkish Fed stance, ongoing ETF outflows, the recent loss of $80,000, and the fact that we're in the longest losing streak since 2018. Number 2, bullish rebound scenario, probability around 25%. Here, the extremely low RSI and heavy selling trigger a technical bounce. The 76,000 support area holds. Price pushes back up to test 80,000 and potentially moves towards 84 to 86,000 if momentum builds. However, for this scenario to evolve into anything more than a short-lived bounce, Bitcoin needs to recover and hold above 80,000 with strong volume. Without that, any rally is at high risk of being sold into. Number 3, sideways range scenario, probability around 15%. In this case, neither bulls nor bears fully win in the short term. Bitcoin trades in a choppy range roughly between $76,000 and $80,000 for several days, while traders wait for the next major macro catalyst, such as employment data or new Fed commentary. This consolidation would act as a loading zone before the next big move, but the challenge is that we won't know in advance whether the breakout will be up or down. Strategy and key levels to watch. Here's a simple framework. This is not financial advice, just an educational view. For active traders, watch 76,000 closely. A break below opens the door to 74.5 and lower. Any bounce towards 80 to 82,000 could be a take profit or short zone if momentum stays weak. For longer-term investors, don't rush in. Better risk-reward zones are likely around $72,000 to $74,000. Scale in slowly if you buy, and never go all in at once. Key things to monitor this week. Can Bitcoin hold 76,000 and reclaim 80,000? Are ETF outflows slowing down or reversing? Any new Fed comments or major U.S. economic data? Bitcoin is oversold but still in a clear downtrend. The macro environment remains challenging with hawkish Fed policy, heavy ETF outflows, and broken confidence below 80,000. The most likely path this week is continued pressure toward the low to mid-70s, with a smaller chance of a technical bounce if support holds. My advice? Stay patient, stay disciplined, and protect your capital. Don't try to catch the exact bottom. Wait for confirmation and let the market show you the way. If this analysis helped you, do me a favor. Hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. I'll be watching the charts closely, and I'll update you as the situation develops. Stay safe, trade smart, and I'll see you in the next one.